Thank you for being here. We are going to talk today about technical analysis and actually practical technical analysis. So let's just start with our presentation right now. Here we go. So we are actually at lesson 5, which is day 3, and we are going to discuss practical technical analysis, as I mentioned. And just let's review what we're going to talk today about. We will cover today reversal patterns. We'll talk about trading ideas with reversal patterns, and then, of course, technical patterns. Now, the difference between reversal patterns and technical patterns is actually where you would like to anticipate a price change direction. That would be reversal patterns, and technical patterns would be more like continuation patterns. So we're going to talk about that and how exactly do we use them in order to anticipate the next move. What do we think is going to happen during our trading session when we watch at a stock live, or when we actually watch the daily chart of a stock if we swing trade a stock. So all of this is important, and of course just is used in order to give us some kind of edge. We're going to start with the reversal pattern, and I would like that to be not very technical. Really, it is technical analysis, but I would like it to be a little bit more practical. Okay, so let's try and see what we can do or how we can use reversal patterns, and then go live and see if we can anticipate something that is maybe about to happen in the market, in a stock, or whatever. So if you, by the way, have a trading platform open, so just take a look, try and find something that you think you want us to take a look at together, and we will try and figure out together based on the materials that we're going to discuss now. Okay then, so the basic reversal patterns are actually quite simple. Some of you, those who already traded and know about Japanese candlesticks, these are quite simple really. But whatever we're watching right now, you always need to remember that once we talk about reversal or breakout patterns, which we will talk later, you always have to take into consideration the trend. Meaning, for example, if I'm watching a morning doji star, which is an upside reversal, as you can see the price is moving lower, then stops right around here and moving higher. So we're seeing here a reversal, but it's a reversal within a downtrend. That's why you see the two so-called candles that you see here, which are not really candles. It just shows you that the price is really descending. So we're looking at a price that is moving lower, 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 lower. And then at that point, there's a red candle, what we called a doji star, and a reversal. There comes the green candle. So we're watching at that, and we are anticipating based on this formation that the price would move higher. Now, does that mean we're going to go long here if the trend is down? Well, absolutely not. We will anticipate a reversal in that case, maybe in order to, well, take profits. Let's say we short a stock and we're looking at this down trending stock, and at that point, based on what we see here, because we may see a doji star over there, then we may consider taking a profit. Question is, okay, so that looks like a very valid reversal. But the main question is, where do we actually move in? Where do we take an action? Where do we click the button? Where do we push the button in order to, let's say, take a profit, close a short in a trade, or maybe just not get into a short, whatever we're going to decide to do. Now that's a practical part. That's what's important for me to go through with you, and not really the technical part. Okay, so that's a doji. Dojis are for reversals, and that's fine. Okay. On the second candle on the tall green, okay, good question. So you're saying Maria, that maybe I should just when it starts being green over here, I should move out. Well, let's actually take a look at some examples. Let's first take a look at evening doji star, and we'll go through them all really, and then we'll go to the charts and start thinking about how we should react to that. So again, in this case, evening doji star, we're seeing that we are in fact in an uptrend. This is why you see the two so-called candles here, not really, but it shows you that the price is coming from the bottom higher. And then at the top, we're seeing the doji star, which means we are anticipating something. And then comes the red candle, which in fact shows us that we do have a reversal. So having a doji at the end of the line, either while we're trending higher or while we're trending lower, is always very important. And the meaning of a doji really is just it's quite simple really, because when you take a look, for example, when we're looking at the descending price, when we take a look at this red candle over here, so you could see that very clearly the sellers were in the driver's seats. The sellers were selling, they were in control, they took over, and all of a sudden you get a doji, meaning doji means in fact that the seller's power is equals now the buyer's power. Therefore, during this candle, and by the way, it doesn't matter how long is the candle, meaning I don't care if these are 1 minute candles, 2 minute candles, 5 minute candles, 30-minute candles, or a day candle or a week candle. If we're taking a look at this candle, it doesn't really matter what time frame we're using. So if we're trading intraday, this would probably be, I don't know, 1, maybe 5-minute candle, most likely 5, because most technical analysis really is based on 5-minute candles. And it is based on 5-minute candles because most of the people are watching 5-minute candles. Now you do know that I'm looking for some technical patterns using 1-minute candle at the beginning of the trading day, which is fine, that's what I do. And my system supports that, which is okay. That's the way I trade, and some systems do not support 5-minute candles, or maybe it's going to be a little bit harder for you to trade with 5-minute candles using my system. However, most systems, I would say 95% of the systems, go with 5-minute candles. And the reason they do that is quite simple. Most people are watching 5-minute candles. 5-minute candles are being watched by institutional traders, and putting everything together means just one very clear thing. Intraday is anticipated mostly, and I say mostly, by 5-minute candles because most people watch them. Because most people watch them, and some people would take a look and see, for example, a reversal pattern, they would come to the point where they say, okay, at 5-minute candles, there's a reversal pattern, maybe I should exit a short here. Maybe I should go long. Whatever. They are basing their decision on 5-minute candles. If you try to base your decision on 2-minute candles because you think 2-minute candles work better for you, well, they may do in certain systems. But if you try to base your decision on 2-minute candles, forget about it, because you are not watching the same time frame as most of the people do. So if you're trying to base your decision to move in on the daily chart, you should be watching 1-day candles or maybe weekly candles, because if you're a core trader investing for the long run, weekly candles make sense. If you're a swing trader or just an investor, then you should be watching daily candles. And when you have some kind of a pattern, then that means a lot of people are watching it. Now, why is it important that a lot of people are watching the same kind of pattern all the time? Well, the answer, of course, is that technical analysis is very much a tool that is being used by so many people at the right time. So, in fact, it's a self-fulfilling prophecy. Now, it's not that, you know, we're trying to invent something that wasn't invented, I mean, thousands of years ago. It just reflects the way that people believe, it reflects the psychology of people, technical analysis, but the most important part is that a lot of people are thinking the same thing because they read the same books, they go to the same schools, or not the same schools, but they go to the same kind of lessons. Like you guys are doing right now, this lesson with me, you know what to anticipate, and that makes you a part of a big crowd of people who are in fact doing the same thing. So really it is a self-fulfilling prophecy. If a lot of people are watching the same pattern, then they will probably act accordingly. Now, does that work better with a stock that's volume is low, or does that work better with a stock that its volume is high? Well, of course, the answer is quite simple. The more people are watching these technical patterns, the more will come to the same conclusion and do the same thing. So if they're going to see doji here, it's very likely that the next candle is going to be green. Therefore, again, it is a prophecy. It is something that a lot of people will be doing according to what they learn, to what they believe in, and so it all comes in together the same way. People are watching the same patterns, are doing the same thing, and we are watching the same 5-minute candles just like everybody else. Let's say we're talking intraday, in order to come to the same conclusion. Now let's go for the morning doji star to the morning star, which is a little bit different because as you can see here, there's a doji really. So that means that buyer seller was exactly like the buyer's power was exactly like the seller's power. But over here, as you can see, that is in fact a green candle here at the bottom, which shows us that the buyers are in fact a little bit stronger than the sellers. Which one would you say is a stronger pattern? This doji reversal or this what we call morning star reversal? Which one would you like better actually? Anything? Any idea? Morning star, doji, morning doji. You say the morning. You like the doji? Okay. Morning. It looks like like 50%. You guys think? Okay. Well, it all comes to what most people think, and in fact most people would believe that morning stars are stronger reversal because it's already green, because you see the beginning of control of taking over of the buyers. Here you don't yet see that in this candle. So most people will think that Morningstar is stronger than Doji Star. Therefore, it's probably a stronger pattern. It's probably going to work better. It's the same thing as you watch, for example, a stock that is moving higher. That's the trend right here. And of course, again, I would like to remind that once more. Always consider the trend. So if I'm watching here a reversal, and this is a reversal of prices moving up and then reversing to the downside, it is in the context of a trend. First, the trend is higher. That's what I'm trying to explain here by these two lines that we're seeing here. So we're looking at an uptrend, and when you look at an uptrend and you get a reversal, you're not supposed to be taking a trade counter the trend. You're not supposed to. You are supposed to take a trade within the trend. The trend is your friend. It is always important. Now, do some traders take trades which are counter trend? Absolutely they do. Is that something you should do as a beginner? Absolutely not. But it is something that some people do, but most likely you're not supposed to be going against the trend. Okay? Just don't do that. And again, even if you think something looks like every day, by the way, if you're with me in the trading room, you would see me react to that every day. Somebody would say, I would like to short something that looks like amazingly strong in my opinion. And then, well, it does look like a great breakdown pattern, but it's up 5%. And I don't even care if it's trending lower, it's up 5%, or it's trending higher. Why would you like to short it? Something like that. Well, if you'll take 100 trades and take them against the trend, you are very, very likely to lose in 60. Then, right, you do remember sometimes the 40 that were great, still, you are more likely to lose money. And that's probably not a good idea. So again, we have the morning star, and of course the reverse side when you're going up, and then you have this small candle right here at the top, and then of course followed by a red candle. Now the technical formation really is only completed when you see, for example, a green candle after this morning star, or a green candle after this doji star. That's when really the technical formation is completed. So if you go by the technical books, let's call it this way, that's the place where you should go long. If you go by what I believe, you are absolutely not in the place where you should go long. So one of the things that you need to know about successful trading is the fact that you need to anticipate the anticipation of others, and that is something that John Maynard Keynes said that many years ago. But this is something I strongly believe in. I don't wait for the technical formation to be completed. I can't wait. In that point where when I'm taking a look at the technical formation, I need to anticipate the anticipation of others. And that means that I'm taking a look at this green candle over here, and maybe during this candle, I will decide that I need to go, or maybe, excuse me, not need to go long, because of course the trend is coming down. This is downtrending, but maybe I need to close my short. Okay, take profits at that point. When should I take the profits? Should I take the profits when this green candle is completed over here? Absolutely not. I need to anticipate this green candle, whether it's going to be in this candle over here or in that candle. It's probably going to be in the beginning of this green candle over here. Now, this is a little bit more tricky, the morning doji star, because it is a bit hard to anticipate a reversal here unless you already start seeing some green lights from here. Now, is it possible that sometime, what do you think? Is it possible that sometime I will anticipate the reversal here, right after this green candle started, but I can still see some green, and at some other time I will anticipate the reversal, let's say at half of the green candle, or maybe a little bit higher than that even. What do you think? I mean, is that possible, or do I have to need very clear rules about that? So should I have a very clear rule that says, okay, when I just start seeing something green, let's say covering my short, or when I'm seeing a little bit more or much more, or wait until the end? What do you think? What should I have clear rules? Yes or no? What's your opinion? Very clear-cut rules to know exactly where I'm moving out. Okay. Oh, interesting. It's a good thing that you're thinking about it. I mean, I want you to think. It doesn't matter if you're right or wrong. I want you to think, because once I ask you a question like that, that makes you think what is really the right answer. If I just talk about it, then you won't remember it as good as if you were thinking about the answer. Let me tell you that very clearly. In trading, you can't ever have a rule. You can't ever have a rule. It is impossible to have a rule. Well, you have a basic rule. You take a look at the pattern and you say, okay, I kind of know what's about to happen. I need to consider my exit point. Let's say again, I'm short. But the rule is based on so many different variations. So many. Like, for example, okay, I see a doji, I see a reversal. I think maybe I should move out. It's already a little bit green. Okay, But then I take a look at the market. You remember the first lesson we talked about the S&P 500, and then the S&P 500 crashes right at that point. So should I have a clear-cut rule, say, okay, I'll move out? Absolutely not. I'm watching the S&P. The S&P is moving down. Maybe I should go through this reversal. Told you about reversals. I hate reversals. One day I'm going to catch the guys that is in charge of reversal. Is going to have a hard time with me. But seriously, if I'm seeing a reversal here and the market crashes down, then I shouldn't have a clear-cut rule. Now, maybe I can see. Now let's talk about stock that is moving higher like that, okay, and I get to see a reversal over here, and then it comes down a little bit. Now I'm looking at that and I'm asking myself, well, should I move out of a long? Okay, I'm long a stock. I'm thinking about maybe taking a partial here, and then I see this reversal, and then it starts coming down, and then I'm looking at it, and then I'm saying to myself, maybe I should close my long just when I see the beginning of a red candle or whatever, or a little bit more than that or whatever. Well, does it also have to do with the volume? Let's say I had a very nice upside volume here, and then the reversal is with very small volume. Let's even consider that the market's not doing much right now, but I can see that it's moving down, but the volume is very, very low, whatever. Or maybe the market's doing this, or maybe the market is doing that, and then I am looking at the volume. Now, maybe I should also be looking at moving averages. Maybe I should be looking at the VWAP. Maybe I should be looking at the sector of the stock that I'm trading. If you get my meaning, there are no clear-cut rules ever. So if there were clear-cut rules, then every software could do that better than we. So you don't need to go through a trading session with me. You don't need to learn trading. You just need to know how to program software that whenever it sees a doji and the slightest part of red or whatever afterwards, it will just take a profit. Does that will make you rich? Well, if you understand what I'm saying, there are some people who are very capable at writing software, and surely more than I do, which, by the way, I don't. But these people, who maybe some of them went through any education, trading education, try doing that. I mean, I've seen so many people trying to write a software. Okay, I see doji. I'll move out, I'll move in, I go short, I go long, because I see a morning star, because I see doji. If you would take a technical analysis book and try to put it all in a software that does exactly like the technical analysis book, I'm promising you, you're going to lose money. I'm promising you, because I've seen quite a lot of tests. I've seen quite a lot of people who are trying to do that. Seriously, guys, it's impossible. It is impossible. You can't put what we're learning today into a software and trust it to make money. It is just impossible, because the rules are so different based on situations, based on volume, based on a lot of things. Then maybe you could say, okay, if you put everything together, the volume and this and that. No, it's not really like that. It is a combination of everything. It is a combination of the chart, the pattern, the what you think, what is the artistic feeling that you have about what's going to come next, about what happened in the last hour. Like you only see, for example, here, when it trends up, you only see 2 candles before. So okay, so it trended up, but where did it really come from? Like what happened yesterday, for example? Did yesterday the stock move up 5% and now it's moving another 2%? Then maybe I would refer to this reversal here a little bit different than if it started by moving up 0.5% today and that's it, and did nothing yesterday. So there's a lot of things that you need to see. There's a lot of things that you need to consider. There's a lot of things that once you see a reversal, you need to know what to do. Okay, let's go to the piercing line. And again, we're talking about reversal pattern. Just to make sure you understand, these things were watched hundreds of years ago when technical analysis was invented. Actually, not not in the Western world, but in Japan. So these things were watched a long time ago, uh, came into some kind of technical analysis, started in the 1900s. I think the first book was written, if I'm not mistaken, uh, by a guy named Cohen, something 1932, 1936, something like that. Can't remember exactly, if I'm not mistaken about the date too. So technical analysis is not has not been with us for long, but the human behavior, which is based on, has been with us for long. So even though people were not watching Japanese candlesticks, well, some people in Japan may have done that a long time ago, but let's say in the New York Stock Exchange or whatever, were not watching Japanese candlestick, they were still referring to the same thing. So a stock is going down, 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 big red candle, there comes what we call a piercing line, meaning a green candle that moves in at least half. That's what piercing line is about, at least half of the previous red candle. That means probably a reversal. So they were not really watching Japanese candlesticks, but it is quite easy to understand that, okay, the price went down that much, now it continues, and now it's coming up, and it's moving here and there. Some of them were painting themselves, by the way. You should read the books. Yeah, there's several books that have been written about trading in the 1800s, late 1800s. There was amazing books. I mean, if you read about them, you will understand that things weren't different back then. They absolutely weren't different back then. Same thing, but less people were doing the same thing. But again, it's all based on human behavior. It's all based on psychology. Some people ask me what is the most important ingredient for a trader to be. I mean, most people would think that you need to be good in mathematics or understand about finance or something like that. Wrong, 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 absolutely wrong. You need to understand behavior. You need to understand people. If you understand behavior, you understand people, you can trade. You can trade. But then, of course, you need to add everything together. Okay, so next one would be a bullish engulfing pattern. Like, of course, price goes down, 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 down. Not a big warrior. It's not a big candle. It's just a regular red candle. And then you can see that there's a huge green candle, which in fact puts in the shadow, as we call it, the previous candle. So as long as this candle is, and again, I'm getting very technical here, but that's the definition. As long as this candle covers altogether the previous candle, including the topping tail and the bottoming tail, then that would be considered as an engulfing candle, and engulfing candles are one of the strongest reversal patterns. Now this is a bit tricky because engulfing can only be spotted when really the green candle just overtakes the red one, meaning at that point. So that again, very technically, that would be the point where you should press the button. Now, one more thing about when to press the button is, okay, as I mentioned earlier, you need to anticipate the anticipation of others. What does that mean, really? And to anticipate the anticipation of others means that firstly, you need to be you need to know the rules, and you need to have quite a lot of experience. The more experience you have, the more you can anticipate the anticipation of other. So if a person just read a book about technical analysis, then it's very easy to anticipate him. If a person is very experienced, then it's very hard to anticipate him. But the fact is, most people are novice traders or investors, therefore you can quite easy anticipate what they're doing. Of course, we never have 100%. It's a very hard occupation. I don't want to sound like it's something easy, but the fact is, anticipation is easy. Being right, if you get to 65 or 70%, that is great. Okay, so here we've seen downtrending stock and then a reversal. Here we're seeing uptrending stock and then a reversal, and that is called a bearish engulfing. Hammer. We're moving down, 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 down. Here's a trend, and now at one point, this whole candle, as you can see from the bottoming tail, was red. Now, again, if you see a bottoming tail, that means that at some time, this green now candle is or was red. Therefore, is at some time, it was a very red candle, by the way, because you can see that there's a very long bottoming tail here. So it was very clear that sometime throughout this candle, again, it doesn't matter if it's 5-minute candle or 1-day candle, the sellers were in control. The sellers were very much in control, and then the buyers moved in, and the buyers took control, and it finished up instead of finish green. And again, that's one of the strongest reversal patterns because you can see that the sellers were in control, and you can see that the buyers took over. So therefore, you have a very good chance of change of direction. And again, big question is when do you click the button? We'll take a look at it soon. Okay, same applies here. As you can see that price moving up, a topping tail in this case. But again, it doesn't really matter if the candle is going to be red or the candle, as you can see here, is green. So even if it's left red here, for example, it doesn't much matter. What does matter is the fact that there's a long bottoming tail. And again here, you don't really care about the color of this candle. You care mostly about the fact that you can see a topping tail here and a reversal right over there. So that would be called a shooting star for obvious reasons, as you can see. That is called a hammer. Okay, does it look like a hammer? Well, maybe. Whatever. So anyway, these are the reversal patterns, and if we want to take a look at them while we're watching a chart, you could see that the same patterns are noticed everywhere. And we'll go live in a few seconds and try and watch that and maybe anticipate the next move somewhere. So if you take a look at this chart over here, at some spatial points, not always, you can see some reversals. Like for example here, a long bottoming tail, or here, a long topping tail, which means that there's a good chance that the price would move down. Now, I can't really tell you about the trend, but again, the trend is always important because, for example, if it's an uptrending stock, as you can see here, there's a new high, low, higher high, and then a higher low, somewhat higher low, then you anticipate a continuation. But again, right over here, you can see an engulfing candle. Okay, and engulfing is one of the strongest reversals, as I mentioned earlier, and it is during an uptrend, therefore you anticipate it to move higher. And right over here, you see sort of a morning star, and then still the stock is uptrending. Even though it did not reach a new high, right over here you can see there's some kind of resistance, you can definitely see that the stock is uptrending, therefore the only direction you should be caring about is maybe going long while you're seeing a reversal like that. And again, it doesn't matter if it's a daily candle, as it is right now on this chart, or if it's a 5-minute candle, it's the same thing. But what else do you see here that help you think that you want to go long? Once you take a look at this chart, what I mean, I'm talking mainly about this point over here. Why would I like to go long here? And we'll go through this later, cup and handles, stuff like that. We'll talk about it. But before we go, we talk about it. What makes me think I really want to go long at this point over here? What makes you feel that way? Higher highs. I don't actually see higher highs. You see, this is high. This high is almost similar. This one is again almost similar. Can't really call them higher highs. You see resistance, right? So it's a very clear resistance. You want to go over the highs, assuming that there's sellers at the resistance point, and then there's a good chance that it's going to be broken. By the way, would you buy before it's broken, anticipating it's going to come up? What do you think? breaking resistance, volume. See volume, you see consolidation, you see 3 attempts to pass the resistance. That is correct. Minimum risk entry after breaking resistance. No, you wouldn't try and buy before the resistance. Totally support what you're saying here. Never ever buy before you can see that the resistance is broken. Maybe if you're trading live and you can see that in your eyes live that let's say it's a whole number or something, and you can see that the number of sellers is dropping down, and you're just about to go long because anyway it's going to come over whatever whole number or something like that. Fine, do that live when you see that, but resistance are there because people are selling there, and there is a very good possibility that this stock would come down and never ever come back again. Never ever come back again. So again, when a stock comes to the point of resistance, you don't want to anticipate it, okay? You want to see it over the resistance and then you want to buy. So again, also anticipation is not clear-cut rules. Okay, so we're seeing 3 attempts, as you mentioned, to break over the highs. Actually, if you take a look at these attempts over here, it's plenty of attempts to break over the highs, and it fails. What I also see here is, yes, the volume, of course, also important, because as you can see, as the stock moving higher, let's say here or over here, the volume is growing. As it moves slower, the volume is kind of moving lower, which is not really correct over here. And as it hits the resistance point over here, the volume is very low. Okay, quite low, and it only grows when you see the breakout, which is something that is very, very good. Okay, what I also see is higher lows. Higher lows are very important. Thank you, Anna. Higher lows are very important. Higher lows means that the buyers are getting more and more aggressive. So they let it move down here, fine. Now they're letting it move a little bit higher. Not really noticeable here, but very noticeable here. So as you can see, buyers are getting more and more aggressive. They are in fact buying at higher prices now. They are buying at higher prices. And again here, they don't let it move much down. They are buying at higher prices. Let's quickly move to the market. By the way, I hate what I'm going to show you. I hate what I'm going to show you here. Let's take a look at the daily of the S&P 500. Okay, so that's the daily of the S&P 500. Now, as you can see, what happened recently in the last few days, this pullback that we're seeing here, okay, which I really hope is going to take us lower. So far, I'm wrong. Initially, it took us lower. As you can see, it took us all the way down here, but that was the day when we gapped down and then closed the gap. That was yesterday, closed the gap, which I didn't really think it's going to happen, but it did. We closed the gap. So what you're seeing here is buyers are getting more and more aggressive, because any pullback right now in the market is, as I'm learning, by the way, to see, is being taken care of by people who would like to buy at lower prices than the highs, meaning they are making use of any pullback in order to buy more. They are. So if whatever we're going to see, whatever we're seeing right now is just excuses to go long whenever the price comes down. So I was surprised to see that yesterday, and that really kind of changed what I thought about should happen in fact this week. I don't know, maybe I'm not wrong yet. Maybe I'm going to see the market moving down the next few days, but right now I'm having second thoughts about what I'm seeing right here. So again, I'm seeing the buyers getting more and more aggressive as the market just pulls back slightly, and then buyers are coming in. So is it possible that the market actually is going to come over the highs? Yesterday I thought no. Today, well, I may be wrong. So again, buyers are getting more and more aggressive. You need to see that, and you need to think about that, and especially when you see this consolidation area over here. Let me ask you one more thing. Now, as you notice, I don't like only to talk about technical patterns. I would really like to discuss with you guys the meaning of things. So The practical part of the technical patterns, we are watching this consolidation over here, as you can see. And I would like to ask you a question. Okay, here we go. What do you think is better before the consolidation, before the breakout, at the consolidation area, right here? Do you think, by the way, we're seeing here, in this case, low volume, but what would I prefer? High volume before the breakout or low volume before the breakout? What do you think is better? What do you think is better? Okay, so it consolidates here for several days. By the way, same thing apply for 5-minute candles. Please understand that. Same thing apply intraday, 5-minute candles. If you're seeing something like that, sometimes it comes with low volume, sometimes it comes with high volume. And please try and figure out, think about it. What would be better? High volume or low volume? So looks like most of you think that high volume is better. We're at 58% better high volume, 41% think it's better to have low volume. The answer is definitely low volume. You want to see low volume. You don't want to see high volume. And let's try and figure out why. Okay. The thing is, you don't want to see the stock changing hands too much. And when you have high volume, that means a lot of new players are coming into. If you have lower volume, that means stock does not change hands that much. You don't want to see new players. You don't want to see new players. It's like, you know, when you live in a neighborhood and there's a lot of new people coming to the neighborhood, is that good or bad? Well, if you're used to your good old neighborhood and to the quiet life that you had, and neighborhood changes, maybe a lot of immigrants coming. Well, I actually said something wrong. Maybe I shouldn't say that. Maybe a lot of young people are coming into it. Is it good or bad? Well, if you're middle-aged and a lot of young people are coming, maybe it's fun, maybe it's noisy. Maybe if you have immigrants coming in, then everything changes because the business changes, life changes. It's not going to stay the same. It's going to be maybe louder, maybe quieter, maybe this, maybe that. Is it good? Most of the time, people who are living in the same neighborhood for a long, long time don't really like that because the neighborhood is changing. Some of them are just moving away, and then more people are moving in, and then the neighborhood changes. So that most of the old hands, as we call them in the stock world, are changing. That means a lot of new hands are coming in, and that is not good for a breakout. And the reason it is not good for a breakout is because when you have new hands coming in, these people who are buying at this point, again, when a lot of stocks are changing hands, these people who are buying at this point are scared hands. These are scared people because any move to the upside that fails, they will quickly sell. You want to see old hands. You want to see people who actually bought it months ago, weeks ago, years ago, or again, when we're taking a look at intraday charts, 2 hours ago, that already made the nice profit. Most of them bought it in this area over here. The average would be somewhere around here. So all of them, or most of them, had made a nice profit. You want to see them trusting the stocks. You don't want to see them selling. A lot of volume here, high volume here, means a lot of people are coming in, but a lot of good old hands, strong hands, are moving out. And when strong hands are moving out, weak hands are coming in. Every small failure in the price. Let's say over here the pullback is relatively moderate, but what would happen if you have a lot of new hands coming here? Any pullback like that could take the price down over here, and maybe it's going to come up, maybe it's not going to come up, but the thing is you want to see low volume at this consolidation area. Any questions about that? It's very important. Next time when you take a look at consolidation area, try and look for lower volume, not high. High volume, that makes it dangerous. You want to be really on your edge. Like if you take a trade like that and you see that it's moving higher, and again, imagine this is 5-minute candle, and when you see something like that, just be real quick when you take a partial, because you want to be among the first to take a partial. You want to be among the first that using the breakout in order to make a profit. You do not want new hands coming into the game. Okay, so again, I'm watching this, and as you can see, I'm combining everything together. I'm combining the trend, I'm watching the reversal patterns, a doji here, bottoming tail here, a doji over there. Does this, for example, topping tail matters? Yes, it does matter, but it does not makes you short, okay? Because again, you are in an uptrend, so you're looking in fact more for upside reversal patterns like we're seeing here, and then of course come the breakout. And then of course if you go along, then you can identify more changes of direction here, reversals and so on, as we learned with the reversal patterns. If you have any questions, ask them. I'm going through to the next slide. Okay, so now we're seeing a stock that is trending lower, and as you can see, we are concentrating on the points where we think that it's going to continue coming down, like for example over here and over here. Now, does it really matter? What did I really want to ask here? Okay. Is it always that we're seeing reversal patterns, like maybe here, not really. In other places, maybe we do, maybe we don't. In many times we just don't, okay? In many times we just don't. We don't see any clear reversal pattern. Does that do we always have to see reversal pattern? The answer is no, we don't always have to see reversal pattern. The thing is, once we see a reversal pattern, we should refer to that. So even though we do not always see reversal patterns, we still look for them, because if we are going to see them, then we can do something about it. If we don't see a reversal pattern, maybe we just don't take the trade, we don't come to a decision. But reversal patterns are there, however, not all of the time, which is very important to understand. Sometimes they help us, sometimes they don't. After what time of the day do you switch from 1 minute to 5-minute candles? Diego, I do that usually after 30 minutes, if I remember. I should after 30 minutes. I still switch sometimes to 1-minute candles. I still do that every once in a while, just to make sure that I'm seeing everything, and also switching back to 5-minute candle and even to 15. But and again, it depends on my system. I have my own system that I'm using quite a lot, therefore I'm using 1-minute candles, but several systems you should be using with 5-minute candles throughout the first 30 minutes, which you rarely see me do. Okay, we can talk now about price patterns, but before we do that, let's take a look at some charts. Is there any not right. I do use them sometime. 2-minute candles, Diego. Yes, I do watch them. But if I watch 1-minute candles, I usually switch between 1 to 5. I am sometimes looking at 2-minute candles, but rarely. Okay. So any intraday, let's move into intraday. Any intraday stocks you want me to take a look at? Anything you think we should be looking at or anticipating? If you like. Oh no, I did not discuss about GAPS, Tyler. I think GAPS is Is it tomorrow or Thursday? I think we're supposed to be learning gaps on Thursday. Okay. Taking a look at X. If we take a look at X, Yum, you want Yum? Okay, whatever. What if the daily chart trend? What if the daily chart trend and the 5-minute chart trend don't agree? For example, an uptrend, good point in the daily chart, but a downtrend in intraday. Well, if I'm trading intraday, the intraday counts, Bruno. However, I'm always taking a look at the daily chart. For example, I don't know if this is the case, but you know, just watch Yum over here. If you watch Yum over here, you can see the intraday pattern is very nice. It shows you that it's trending higher, and you may think, okay, I would like to go long somewhere here. Let's say I find a good intraday pattern to go long. That looked great, by the way, right over here. This one also looked very good. This one also looked very good. So I can in fact find 3 good technical patterns in Yum today. Okay, so Yum looks great, but then you need to switch to the daily too. If you switch, and while you switch to the daily, excuse me, then you may see something different. For example, before I click on the daily, what would in fact make me say I don't want to go long Yum, even though it looks like that? For example, if Yum crashed recently and that's just a pullback day, I would consider going long in Yum. Okay, uh, let's just take a look. Okay, that's daily. What Yum does recently, Yum is downtrending. Definitely is downtrending. Okay. So can Yum change direction over here? Yes, absolutely. Maybe it already does. Does it look like a good long trade? Again, what we're seeing here on the daily chart. No, it looks terrible. It is trending lower. It recently crashed. Maybe it's going to continue higher. Maybe it's going to change the trend. I don't know, but daily charts looks terrible. Can I go long intraday based on what I see here? Yes, I can. Would I give it more points because the daily looks great? Absolutely not. If I would see you going wherever, I don't know, maybe over this area over here, I would definitely give it some points for the daily. Right now, I don't. Does that mean it's not going to succeed? No, it could definitely succeed. So I may decide to go Yum because the daily chart didn't definitely say don't go long. Sometimes I'm watching daily charts and I would definitely say don't go long. Okay, that's not the case of Yum. Okay, that's not the case of Yum. You know what? Let's go here. Yum crashed here. That was in November. Yum crashed here, and there was a terrible day over there, and the continuation. And look at the green day on, which is the 3rd day. Okay, there's the 3rd day over here. If you ask me at the beginning of this day, of course, this is a pullback day, and in fact, you moved up several percent in this day. This is a small candle over here, means that you moved up quite a lot during this day. Of course, less than it moved down in the previous days, but still again, you moved up. So maybe I could have looked for a reversal pattern, intraday reversal pattern right over here and go long Yum. But if I take a look at the daily, I would definitely say, oh my God, it just crashed down. Pullback is not very likely, certainly not on the 3rd day. Sometimes it comes on the 4th or afterwards, as you can see here it happens on the 5th day. But on the 3rd day or the 2nd day, if I would have seen you moving higher, I would definitely say no way. I'm not going to take this trade because it just crashed down so much. I am absolutely not interested going long Yum. Now, do I see that now? No, that doesn't look like something I would definitely say no, but I would kind of consider maybe I should, maybe I shouldn't, and then I go back to the intraday formation, and if I see something which is perfect because it gapped up today, moved over the highs, right over here, well, I would definitely say, okay, so the daily doesn't look so great, but still I would like to go long you. Let's go back. Let's go back to the technical pattern over here. So we are trending higher. Could we see or look for a reversal over here? What do you think? What do you think about that? Would you like to go long when you see something like that? That's a reversal, okay? There's a very big red candle over there, a sort of a morning star, as we learned earlier, and a green reversal afterwards. And of course, that looking at it right now, if you went into this trade, if you went long into this trade in here, you could have had a great trade. But what do you think? Would you actually go consider this as a reversal and go long? Yes, no? Yes, because the sellers weakened the tail. You see the tail here. That's, by the way, a good thing. It doesn't really matter if the tail, that's a good point I have to say. It doesn't really matter. And you know what's funny, because we just went through reversal pattern and we did not discuss what happens if this is a doji star but there's a trail before. And it's a good thing that you're putting things together, because again, even if the previous candle had a tail and the candle right now is green candle, and that's a morning star, and then okay, so we don't have a tail here, we have the tail there, still is fine. Absolutely right. Well, most of you seems like saying no. Um, well, I would probably say no, but I'm not sure about my answer. Has to really be, really needs to be addressed a little bit differently. Let me think again about my answer. So yesterday's close was 63.50, okay? Open was 63.97. That's 1% up, exactly 60 cents. Sorry, 63.50, 63.90, sorry. That's 40 cents, that's like 0.8%. So it gapped up something like 0.7, 0.8, which is quite a nice gap up, quite a nice gap up. And the stock that usually gaps up that much, something's going on. Something's going on. And then there's this bottoming tail here. That means that it moved down. Let's actually see that in 1 minute candles. It may be a little bit more clear for to see. Yeah. Started here, moved down real fast, closed the gap, moved all the way back to the highs, returned, came down, came up. That's the reversal, okay? That's the reversal. By the way, if you take a look at 1 minute candles, well, actually it looks much better to go long here than in 5 minute candles. That's why sometimes you need to consider going long with 1 minute candles, or understanding 1 minute, or at least taking a look at 1 minute candles. So that's quite a valid reversal. And when you take a look at this, and the first candle of course was red, but then when you really don't think about the first candle, you can definitely see that it looks like an uptrend. It starts here, moves down, and then looking at 1 minute candles, I would definitely think I may go long. I may go long. And going back to 5 minute candles, oops. Okay, going back to 5 minute candles, we can see that again, we've seen that more clearly in 1 minute candles. That's why at the beginning of the trading day, I suggest you take a look at 1 minute candles. Again, depends on your strategy. Then we can definitely see that there is a kind of reversal that we should consider to the long side. So yes, there is. And then once it moves over the highs and continues, then we clearly see that it's uptrending, and as it uptrends, we can definitely look for reversals. So we're having a pullback here, big red candle, sellers are aggressive, smaller candles, smaller candles, smaller candles, bottoming tails. These are reversal patterns. We don't have to learn them in order to understand that these are reversal patterns. And then we get a green candle. Big question is, of course, when should we click the button? When we're taking a look at something like that, by the way, it happened here too, but it was not as clear as here. Here we can see a formation of red candles, which is always easier to notice, because if you take a look at the way the price moves up here, and then you got 4 red candles, and each and every one of them is smaller, and some bottoming tails, then once the green candle comes in, I suspect that somewhere at this point, right over here, I would click the candle. I could definitely think about going long somewhere over this, somewhere at this point. And again, you need to anticipate the anticipation of other. And again, you don't wait until this green candle is over and then go long at the next candle. You need to anticipate the move right here at this candle. That's and in the middle of this candle, somewhere over there. And then it continues higher, and then small doji here, but you can't really tell much because it's still really uptrending. Very small pullbacks, very hard to anticipate. I don't think I see anything in this area over here that could help me decide to do anything. Okay, to do anything. That could be helpful, and that could be helpful. That's it. Sometimes you don't even see that too. So really, who knows? GALT. Let's take a look at GALT. Definitely moving lower, but the problem here, of course, is the low volume. Because when you have low volume, then, well, firstly, it's a $2 stock, then you can't really trust them because there's not a lot of institutional traders there, but the volume is too low, so we need to take a look at something else. Taking a look at R. It was definitely trending, uptrending over here. That was still considered to be an uptrend as it did move to a new high. Nice morning stars over here. It's not really right over here. It's not really engulfing candle. It's very close to engulfing candle. You could consider going long somewhere over here. Possibly think about going long over here, which didn't really work that great. Over here it's a little bit risky, and the reason it's a little bit risky here is because, as you can see, it moved under this recent low. Even though it's just a little, it still is a bit risky, but then you have this engulfing candle, you could still consider going long. So as you can see, in many of the good entry point, potentially good entry point, not all of them are good, you can definitely see some kind of reversals. And again, as you can see, I'm concentrating on the, once it's uptrending, I'm concentrating on it as it moves higher and trying to figure out what really is going to happen. Let's take a look at Tesla. Well, really nothing, because at the beginning of the trading day it was trending lower, then sideways, then somewhat higher. Even if I see something somewhere over here, I don't care anything. I am not even watching this. Okay, so there's a nice reversal pattern over there. What should I do? Go short? It's at the high of the day. No. Should I go long here? No, because it's not really uptrending. Should I go long here? Yes, that is a reversal pattern, this bottoming tails. But should you go long as it is downtrending? No, even though it's gapping up today and looking great because it's a gap up, still you shouldn't go long. You shouldn't go long. By the way, you could go long here. You could go long here at this green candle. That would be a failing trade, but of course you don't always succeed in trading, but if you disregard whatever happened later, because it's very hard to anticipate it, of course, once I see this green candle in a stock that is gapping up that much and at the same time the market is trending up, I should definitely consider Tesla long over here. Okay, Apple is the last one we're going to look at. Oh my God, what happened to Apple today? Wow, unbelievable. It's up like 2.1% today. Got to see the daily. Well, you see, That's a good example. Why? Because Apple has a very nice breakout pattern here when you watch the daily. When you take a look at the daily of Apple, uh, right over here, it really looks great. So very nice breakout formation when you take a look at the daily. Therefore, when you combine everything together, like the daily and the intraday, you can definitely say, okay, I want to go long somewhere. Now, by the way, coming back to the daily, this breakout formation is true for approximately 142, something like 142. That would be the point. Let's take a look at the intraday, where 142 was right over here. I couldn't find any technical entry here, for example. That right over here, it was just a bit too extended. Can't find any technical entry, but there definitely was one here at 140, 150. So 140, 150 could have been a great entry point in Apple. And again, uptrending. Buyers are getting more aggressive here, as you can see. They are, don't let it move down that much. Nice resistance over here, and finally goes up. Now that you understand that you have an uptrending stock, now that you understand, you can start looking for reversal. So here's a nice reversal. That's a nice reversal pattern here with bottoming tail. There's a nice reversal pattern over here. Now, of course, you know, looking at it right now, that makes it, theoretically speaking, much easier than in real life. Because when you really are looking at it during the trading day, then of course it is a little bit more tricky. It's not as simple as making a decision right now. I mean, trying to figure out what happens right now. But again, if you are being supported also by a market that is moving higher, and as you can see, the market is moving higher today, then let's try and make it look like Apple here. So you really you have the backwind because you take a look at the S&P 500, and then at the same time you look for patterns, reversal patterns, so on. So the thing is, again, as I mentioned at the beginning of our lesson today, you need to combine everything together. You need to combine the fact that you're seeing reversal patterns, and that the trend is higher, and that whatever. So that's very important to combine everything together. Well, Lane, I'm sorry. I know you asked this question a while ago, but I don't know right now what the answer to be, because I don't know exactly what it was asked about. Well, several questions. To trade today using a pullback. Would you look for pullback in 1 minute or anticipate 5-minute candles? Well, you could have seen the same thing, Lane, as in 5 minutes. What was it actually that I was? I have it here. I have a trading platform here. It was, what was it? DRI, right? DRI. Let's see, by the way, what happens there. Well, DRI. Yeah, that was right over here. 1 minute candles, you can't really see that in 5-minute candles. You can only see that in 1 minute candles, really, because even that is hard, because it moved over the highs, waited for a pullback, and then went into this pullback over here. So yes, it was a 1 minute pullback, otherwise it was very hard to see. I did see it in a 1 minute pullback. So DRI was a great, nice trade. Yes, I think, Diego, I would. If I would have seen Apple the way it did today, and even though I don't usually trade Apple, I definitely think I would have considered that going for a long. You know, it's kind of easy to say it now, okay? I really have to put my money where my mouth is, and you know what? If I would have seen that live, right now it looks logical, but if I would have seen it live, well, you know. It also depends. Let's say I was losing money today. Let's say I was winning money. It's things are different. Things are different sometimes. Okay, let's. Sorry if I missed some of the questions, guys. I'm sorry. I have to go to the next slides. Price patterns, guys. Price patterns. Technical patterns. Price formation usually made continuation movement in the same direction. Pattern may occur in any time frames, 5 minutes and so on. This technical pattern combined with trend can give us trade idea and so on. Yeah, I think we kind of talked about everything that is written here, and they help us determine the correct entry and exit point. Absolutely. So these are the most used price patterns. Now again, when I'm watching, for example, cup and handle, and let's say I want to go long at this point over here, we need to consider the trend. And when you take a look at the way that this cup and handle is formatted, then you need to consider that the price really came down from here down. Okay, so when I'm looking at that, you know what, let me try and draw this if I can. Okay, so you just need to imagine that the price maybe came in from here. Okay, oh my god, what did I just do? Okay, not really like I painted it. Okay, but seriously, the price came in from here and came to the point where you see this cup and handle formation, and then you want to go long, because the previous trend is higher. Okay, it's moving up. I have to delete this terrible painting that I just made. Okay, so again, going long means that trend was coming from here. Over here, inverted cup and handle means that the trend started somewhere from here, moved up, sellers got more aggressive, and then comes the breakdown where you should maybe short. And that's a head and shoulders. Head and shoulders, actually this is wrong. This is not, this is the inverted head and shoulders, and this is in fact the head and shoulders. It's wrong as it's stated here. So that's the left shoulder, here's the head, that's the right shoulder, and at that point these are again accepted, let's call them this way, breakout or breakdown patterns. So here you want to short it once it comes under this dotted line. Here's you want to go long, and that's an inverse head and shoulders where you have the left shoulder, head, and right shoulder. Okay, and double bottom, same idea. Again, price finds some resistance, and again it comes from here, so that's an uptrend. Price goes up, finds some resistance, come down, comes up again, same resistance, come down, but to the same distance right now, and then moves higher. What is better, that the price comes down the same distance as this one, or maybe this one is better, when the price really first comes down here, goes up, comes down a little bit less, and then moves higher? Which one would you prefer? This one over here, forgetting about the previous one, okay? This one over here, or that one over there when the price comes to that point? You prefer the higher low, which means like here, meaning that at that point the price did not come down all the way to that point. You prefer the double bottom, Maria, which means it came down to this point. Okay, double bottom, you too, Frank? Okay, I would actually prefer that. I would like to see the buyers getting more aggressive. I can see that they started buying here originally, price came back, came down, failed to move higher. Buyers are in fact getting more aggressive, fighting for every stock that is available, and then moving higher. That shows me that the spirits really are, everything's getting warm, and it's more likely to move higher. And then we have a triple bottom. Well, the more the consolidation is, the more likely for the stock to move higher. Okay, the more it consolidates, the more likely it is to move higher. Therefore, there's an old saying saying the longer the base, the higher into space. So as you can see, it's basing here, and the longer the base, the higher into space, because it's like steam that is being built up here, and then once it really comes through, then oh my god, it really runs. So that's something that is very important. Now the inverse formation of course is the same. That's a breakdown, and head and shoulders and everything, just like we just discussed. Let's take a look again at the screen. And again, if you take a look at DRI, that is team building, okay? That is team building. That means that this breakout should be very nice once it moves over the highs, which wasn't, by the way. So it doesn't always work, right? And maybe it's a little bit late now for it to work, but this consolidation here is very, very nice. And you can really take a good look at it in different formations. I think what was it? Shop, was it? Was it the daily? I remember something in shop. Yeah, look at that. Look at this consolidation. That was something I actually missed. But look at this consolidation, long consolidation area here. That's the daily, of course. And look, it consolidates, and then over the highs. That's a nice breakout formation after a long consolidation. But you can find it in really plenty of stocks all the time, really. Yes, so just a question based on yesterday chart, DRI, can you figure out today move? Can't remember really how DRI looked yesterday. Well, no, you can't. You see, that would be a nice breakout over here, right? So if you take a look at the daily of DRI, you know, it's funny, I think it's the first time looking at the daily. So when you take a look at the daily, that looks like a nice breakout, but that could have been very nice if the price would have started somewhere around here and moved higher and then moved over here. But it really started with a gap up, a very big gap up, and then continued. Sometimes when it gaps up, you don't really need to look at it. By the way, there is a move over the recent highs, which is right over here, which could have helped. That's a resistance point, recent highs. Now sometimes you need to go to the weekly chart to understand where it's coming from. Now the more I look at it, the more I like it. The more I look at it, the more I like it. So it's obviously all-time highs for DRI. All-time highs for DRI. It's just moved to new uncharted territory. Then yes, that certainly is helping. Why is that, by the way? If I'm moving higher, why does it help? To a new uncharted territory. Why does it help me, guys? Any answer? What do you think? It is an all-time highs, what we're seeing here today. All-time highs. That's the weekly, by the way. If you take a look at the daily, again, these are all-time highs. Never been to this territory, DRI. Never, ever been to this territory. No resistance. Why? You're right. Why no resistance? Oh, well, of course, it's a stupid question, sorry. I mean, surely no resistance because yeah, that's the answer I was looking for. Syed, you're correct. Well, you know, when no, of course you're right. Anyway, when a stock comes to this point, let's say over here, and then comes down, there's a lot of people who lost money, in fact. Because think about all of these people who bought the stock right over here. So these people are in fact losing money as the stock is moving down. Their only wish really is that the price would come back to this area. When the price does come back to this area, they will start selling. They will start selling. So, for example, throughout the time that the stock is moving down, all of here is not just sellers. For every seller there is a buyer. So there's a lot of people who were selling as it moved down, but remember that every seller found a buyer, and the buyers are waiting for the price to come down. Now the buyers here, as the price moved down, says, oh my god, if it's just going to come back to the price I bought, then I would definitely sell. Now as you can see, for example, over here, there are, at this point it was several days. You see that? Here it was less time as it moved down, but here it stays 1, 2, 3, 4, maybe 5 days. So at this area over here, it stayed quite a long time. That means there were plenty more sellers, therefore buyers, meaning there's a lot of people who watched it at that point, decided to go long because they thought it's probably going to continue higher. It failed. It came down quite dramatically, by the way. It's like 10% here, okay? Maybe less, maybe 8, maybe 7, something like that. So it came down. Their only wish is for the price to come back up. So if the price really comes back up to this area, that means that these people, many of them, not all of them of course, are going to be sellers. And that's why it finds resistance over here. So yes, the daily certainly helped, and especially when it moved over this high over here, that is vacuum. Nobody who really wants to sell because it just came to his buying point or whatever. So that's a very important thing. Do you at this time base the movement on the market? Yes, absolutely. At this time of day, you should be basing it on the market too, of course. That's one of the tools. Going back to the slides. We're going to discuss some basic formations here like cup and handle. So as you can see, that's the cup, that's the handle, and again the idea is very simple. As you can see, price is moving down, buyers are becoming aggressive, buyers are becoming more aggressive. It also has to do not just with the fact that the buyers became aggressive at this point over here, which is higher, which is important,